The company that we picked to analyze is Hartalega Holding Berhad and Supermax Corporation Berhad. Both of these companies are the leading companies in the rubber glove industry, especially in Malaysia. Hartalega Holding Berhad is known for its innovative technology and top quality product. They specialize in producing natural gloves that are in high demand in the healthcare and industrial sector. While for Supermax Corporation Berhad, on the other hand, has a diversified portfolio that includes latex and natural gloves. They are committed to sustainability and environmentally friendly practice. With a commitment to innovation, quality, and sustainability, Hartalega Holding Berhad and Supermax Corporation Berhad are two companies to watch in the rubber glove industry.
I will present about the liquidity ratio. Liquidity ratio have a three ratio, which is quick ratio, current ratio, and net working capital. What is the current ratio? Current ratio is a measure the company's ability pay its short-term liabilities. In a period 5 years, Hartalega shows a positive current ratio that is consistently increasing from 2018, which is to 2.09 times, until 2023, which is 3.91 times. While for the same company, Supermax also has an increase over time over a period of 5 years, whereas in 2018 it was a 1.01 times and increased until 2022, which is 4.95 times. Therefore, both of the companies see an increasing every year. That's more when. Next, I will explain about a quick ratio. A quick ratio is a measure of a company abilities to pay short-term obligation without relying on the least amounts of liquid assets. Quick ratio only takes into account current cash and assets that can be easily converted to cash. Most companies have had a positive quick ratio in 5 years. Hartalega has a quick ratio of more than 1 from 2018, which is 1.40 times, and until 2022, which is 3.43. So have the increasing in the quick ratio. Meanwhile, Supermax also has an increase, but in 2018 and 2019, the quick ratio shows a negative quick ratios of 1, which is 0.98 times and 0.75 times respectively. Therefore, Supermax shows more than 1 in 2020. So the stats show a positive quick ratio is 2020, which is exactly 1.00 times, followed by 2021 and 2022, which is 2.05 times, and 2022 is 5.62 times. So one of the ratio in the liquidity ratio is net working capital. So net working capital is the measure companies access funds, which is liquid assets available after paying its daily operation, obligation, or the current debts. The purpose of a net working capital to determine how efficiently companies use its capitals. Hartalega has the lowest and highest price in 2018 and 2021, which are RM 2380.51 in 2022 and RM 452.81 in 2018. Each year has a positive and increasing net working capital. Meanwhile, Supermax also has an increase in the 5 years, where in 2018 net working capitals is negative, which is RM negative 39.91, and increase over times until the 2021, which is RM to 85.11. Then there is a slight decrease in 2022, which is RM 3179.76. So that's all from me about the liquidity ratio.
Assalamualaikum. My name is Muhammad Faris Azrin bin Abdul Ramli. My matrix number is 2023190007. So I'm going to briefly explain about Hartalega and Supermax activity ratio. The inventory turnover that recorded highly was Hartalega, which value of 7.95 times in 2020, as compared to Supermax, who recorded 5.54 times as the highest inventory turnover in among 5 years. A low inventory turnover will be increasing the company costs. Nevertheless, high in turnover ratio usually indicates strong sales and low holding costs. It is proven that Hartalega is a productive company that manages its sales as compared to Supermax. Supermax graph shows that it is decreasing by 2.76 times in 2020 and 2021, although it is increasing by 0.36 times in 2019, while the graph for Hartalega was rising from 1.31 times in 2020 to 2.73 times in 2021. As a conclusion, as compared to Supermax, Hartalega was able to use its fixed assets more efficiently to generate revenue. Thank you.
Hi and Assalamualaikum. My name is Muhammad Kushari Falcon bin Kamarul Baharun. My matrix number is 2023185149. And I'm going to explain about the profitability ratio for the two well-known company, which is Hartalega and Supermax. So, Hartalega and Supermax show a good ability to return on asset in terms of gross profit margin. However, Hartalega outperformed Supermax with respective result of 61.13 and 60.79%. Hartalega and Supermax has operating a profit margin ratio of 58.84% and 70% respectively, with Supermax surpassing Hartalega as a key indications to creditor and investor. About now, their business is continuing to run. The mirrors that can be met is that Supermax is able to control their profitability ratio, which will be more advantageous to the business than Hartalega.
Hi, my name is Adil Simran bin Adli, and my metric number is 2023115111. So I'm going to explain about leverage ratio for two companies, which is Hartalega and Supermax. So comparative analysis shows that Hartalega is better at handling their finances and assets than Supermax. This is because of the percentage ratio of the Hartalega only differ with a small rate. Furthermore, Hartalega only maintain their debt ratio less than 30%, while Supermax exceed than 50% for 4 years straight from 2018 until 2021. By having a good debt ratio, the company doesn't need to borrow or use existing assets to pay off the company's debts. Besides, Hartalega also has a good debt to equity ratio than Supermax, which maintaining the ratio with not exceeding more than 40%. Thus, the lower ratio, the easier it will be for the company to secure financing, while the higher the ratio, the higher financial risk and the possibility of loan rejection.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Irfan Hilmi bin Umar Rosli. My number matrix is 2023115095. I'm from class BA 2422G. So I will present the market value ratio for the company Hartalega and Supermax. We need to calculate the earning per share and dividend per share for both of the company. The formula for finding earning per share is net profit minus dividend and divide with total number of share outstanding. Meanwhile, the formula for dividend per share is dividend divide with total number of share outstanding. The amount that will be generated for each standing share of common stock during the period has been determined using earning per share. According to Hartalega, the greatest total was RM0.67 cent in 2021 and the lowest was RM0.05 cent in 2019. 2021 was Supermax's best revenue year with RM2.56 cent, while 2022 had the lowest with RM0.04 cent. To determine how much dividend common owner would receive for each share they own, the dividend per share was employed. The Hartalega Company's projection is RM0.87 cent for 2022 and RM0.09 cent for 2019. Supermax reports an RM0.33 cent dividend for 2021 and an RM0 dividend for 2020. It demonstrates that Hartalega has a significantly higher dividend than Supermax. Data on earning per share showed that Supermax made RM2.56 while Hartalega earned RM0.67 cent. This can demonstrate that Supermax has higher earning per share over a 5-year period compared to Hartalega, demonstrating that it can better support its business with its profit over the long term. Hartalega slightly surpasses Supermax with RM0.11 cent and 0.05 cent respectively. So, however, both businesses distribute a larger amount of their current earning as a dividend per share to common stockholder. Over a period of 5 years, it is clear that Hartalega can increase profits through increased dividend payments to shareholders in order to retain their interest. Comparing Hartalega to Supermax, Hartalega is earning more money for every dollar invested. We come to the conclusion that both companies' market value are in good health as a result of their improved ratios. Both have the potential to perform well enough to maintain their respective market shares over time.